Silver just crashed. In the last 48 hours, silver plummeted from $67 to $52. That's a $15 drop. Investors are panicking. Portfolios are bleeding red. People who bought at $67 are now sitting on massive losses. But here's the thing. This crash tells us something bigger is coming. And in this video, I'm going to show you exactly what happened, why it happened, and most importantly, what comes next. If you own silver, you need to watch this. If you're thinking about buying silver, you definitely need to watch this, because the next 48 hours could be critical. Let's break it down. So what exactly happened in the last 48 hours? Silver was trading at $67 just 2 days ago. Everything looked bullish. The trend was up. The moving averages were pointing higher. And then, boom, it crashed. $67 to $65. Then $65 to $60. Then $60 to $55. And finally, $55 to $52. A $15 drop in 48 hours. That's not a normal pullback. That's a crash. That's panic selling. That's institutional investors dumping their positions. Let me show you what the chart looks like right now. The beautiful uptrend that was forming? Destroyed. The resistance levels that were supposed to hold? Broken through. The support at $65? Obliterated. This isn't a correction. This is a reversal. And if you bought silver thinking it was going to $75, you're now sitting on a 20% loss. That's real money. That's people's life savings evaporating in 48 hours. But why did this happen? 3 major things triggered this crash, and you need to understand them. Number 1, the dollar surged. Remember how we said a weak dollar pushes silver higher? The opposite is true. When the dollar gets stronger, commodities like silver get weaker. And in the last 48 hours, the US dollar index jumped hard. It went from 103 to 105. That's a massive move in the dollar. Why did the dollar surge? Because the Fed just signaled that interest rates might stay higher for longer. Investors said, wait, rates aren't coming down? Then I want to own US dollars, not silver. Boom. Dollars bought, silver sold. That's the first domino that fell. Number 2, economic data came in weak. Jobs report was disappointing. Retail sales were weak. Manufacturing data was worse than expected. When economic data is weak, investors usually buy safe havens like gold and silver, right? Wrong. When economic data is this weak, investors get scared. They don't buy commodities. They sell everything. They move into US Treasury bonds. They move into cash. They hit the panic button, and that's exactly what happened. The moment the economic data came out, silver got crushed. Number 3, technical breakdown, the domino effect. Silver was sitting on a knife's edge at $67. It was stretched.